Honestly, nothing has changed, but everything has changed. It's a very weird rate market right now.
Economists don't really know what the heck is going on. The banks don't really know what's going on. They're, having to take it day by day.
Headline after headline after headline of good news, bad news, good news, bad news, good news, bad news. And I think everyone's just kind of numb to it now.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. I'm Paul Stevenson. I'm a Level 2 mortgage agent. I'm joined by David Warren, Level 2 mortgage agent, owner, Referral Mortgages. David, how are you doing? It's coming home.
It's coming home. It's coming home.
World Cup. We got two semifinals. Yes, big victory.
Yeah.
Big victory.
Big victory. We got, it's coming home, baby. It's coming home. That's all I can say.
Speaking of homes, Dave, this is the Real Estate Podcast. Last week, we went on a big rant about soccer. So this week, we're going to keep it somewhat real estate related, but we just want to say go England. Hey, go England. England-France final, I think, would be epic. It's been an amazing World Cup. I mean, I think North America has shown that we can host any event, Olympics, World Cup. We can do it. Come here. Bring it home here, right? Yeah.
It was interesting, actually. I was reading some articles about it that, like, North America hosting all three countries and how other countries, when they've hosted the World Cup, they've had to build out their entire infrastructure of stadiums, of transit and everything like that leading into it. And that Europeans didn't really believe that North America would be able to host such an event. And really, neither Canada in Toronto or Vancouver, nor the US, nor Mexico really had to do much in the way of like changing any of their venues. Like Toronto, they added some stands, in the end zones, but that was really it. In the States was just their regular football stadiums, and the same as in Mexico, their regular football stadiums. They didn't really have to change much from an infrastructure investment, which was pretty interesting to hear from like that injection. But I know again, like you said, we're on the real estate side of things, but this World Cup being in North America has really driven some employment.
Yeah.
And, we've seen numbers come up of people coming in from, other countries coming into Canada for the World Cup, driving, spurring economic development, which is obviously going to show in some of our numbers and leading, like, in our June numbers, in our July numbers, as far as like employment uptick and things like that. But I know the job numbers came out for June. Maybe you want to touch on those.
Sure. Yeah. Segway Dave is back. So
Segway
here we are.
Dave.
Yeah. The headline for jobs in June was that there was 18,200 jobs added, right? And that sounds fantastic. Canada's crushing it as far as job creation. But when you actually look at the breakdown, maybe not so as exciting. I mean, it is exciting in some ways, as we talked about before we came on air, which we'll get into, but I'm going to run down the numbers, just kind of high level numbers, and then we'll touch on them. So jobs added was 18,200. Unemployment rate dropped to 6.5% from 6.6, so a slight decrease in the unemployment rate. The private sector, this is where the numbers get interesting. Private sector added 32,000 jobs. The public sector lost 31,000 jobs, so almost completely at par. Private sector, 32,000 plus. Public sector, 31,000 minus. Full-time employment, little changed. Part-time employment accounted for the most of the gains, or most of the gains. So youth employment, which is basically aged 15 to 24, so summer jobs, part-time jobs, etc., 33,000 jobs. Now, I don't want to harp on that too much, because this time last year, 2 years ago, we were complaining that there was no jobs available for the youth because the youth unemployment was so high, there was no jobs available, etc. So seeing this is actually encouraging, I think, to see that there are part-time jobs and jobs available for the youth to have, plus 33,000. Manufacturing jobs, though, David, down 17,000 jobs, and those are definitely not part-time student employees. Manufacturing, obviously, in Canada should be a huge industry, so losing 17,000 jobs is massive. Accommodation and food services plus 15,000. I'm sure that also accounts into the part-time jobs. Average hourly wages up 3.3% year over year to $37.20 an hour. That's the average hourly wage. Labor force participation, 65%, basically unchanged. And the employment rate, 60.8%. That's up 0.1%. So just looking at that kind of rundown of numbers, Dave, like, to you, what stands out? And is there anything in there that's either concerning or exciting, motivating, positive?
I mean, negative being the manufacturing jobs. That's definitely as a result of that sector being hit the most by tariffs. So, and those are a lot of those, blue collar jobs, a lot of those companies still have pensions, things like that. And so those are going to be, are being hard hit. Hopefully, we've talked about it nauseum for months, but hopefully that gets resolved and when those jobs can come back tenfold. The summer employment for students, not that surprising. Again, I think a lot of that has to do with, like I said, World Cup, a lot of
Yes.
restaurants, a lot of hospitality, hiring, things like that. And on a temporary basis, the youth unemployment rate, I think, was almost 20%. So that
It was. Yeah.
obviously will have hit into that or knocked that down quite a bit over the summer. But July and August numbers will be more indicative of whether like those jobs that were created due to World Cup. I mean, we've been out at restaurants and bars. We've been out to some of the World Cup games. We see how that's impacted the economy from a hiring standpoint and what's been needed for those. So whether they retain those jobs or not, to be seen. But the big one that I saw that really stuck out to me, unfortunately, is that manufacturing.
Yeah. I mean, the private sector hiring returning, I think, is good. Like it's kind of balanced out. I mean, as we know, I think it's 40%, or there's like a large percentage of the Canadian population that works in the public sector in some capacity. So I think just having like private sector is good because that should also elevate our GDP. If we have like companies that are growing and able to hire and, the business itself is expanding, I think that's good generally for the country. But the fact that the majority of these, like you said, like manufacturing, 17,000 down, agriculture, 7,600 down, utilities, 7,300 down. These are kind of the industries and the areas where a lot of people do work in kind of that public sector, or at least in full-time jobs, I guess I should say. Like these are not part-time jobs that are being lost. So these are full-time salaries that are being reduced. And I also wonder, we've talked about this, but we've seen a lot of jobs reduced in the US because of artificial intelligence. How much of the manufacturing is being taken over by, or a portion of it being taken over by automation or AI? Same with agriculture, same with utilities. We had a friend who 15 years ago had a tech business that was focused on agriculture. It was on milk and basically sensors on cows to know what's the temperature of the milk, how much milk are they producing, all these things that agriculture didn't have before. And these sorts of tech creations or artificial intelligent creations are also going to continue to reduce those jobs in certain areas that people wouldn't expect, right? Everyone thought it would be kind of the white collar jobs that would be impacted by AI, which I think will happen in the coming years. But currently it is a lot of the manufacturing, agriculture, and utilities that are being impacted because of the fact that some of the administration jobs can be automated now through this tech.
Yeah, there was a survey done that came out this past week that they interviewed manufacturing companies of whether they are looking at expanding their operations within Canada, moving their operations out of Canada, how they foresee the future. And it was 4 out of 10 companies are either in the process of moving to the US or are going to be moving to the US within the next 2 years. And I believe it was a Reuters survey. It wasn't like a rinky dink, survey or anything like that. Sorry, it was a KPMG
Okay.
survey. But, the unfortunate thing with that and why I kind of talk about that manufacturing number being down is that with Kuzma, not being officially extended and it's in this 1-year renegotiating cycle for the next 10 years, we've got tariffs, we've got additional tariffs being added by China that just came in to a sector last week or 2 weeks ago, enhanced within the US tariffs. A lot of these companies and manufacturing companies are saying, well, I need to move to the US. And it's unfortunate that 40% of companies surveyed are saying that they're either in the process or going to be moving to the US within the next couple of years because they just can't wait. Is very unfortunate for those jobs and those creations because those people are not going to stay in Canada either. Like those with those lost employment, if their company is not going to stay or other companies in their sector are not going to stay within Canada, then we're going to lose that. There's kind of that, that brain drain that's been in a lot of articles of like that loss of highly educated workers from Canada, kind of brain drain outside of Canada. The unfortunate thing is we'll also have that like manufacturing drain as well, which will then just put stress and pressure. Obviously, hopefully that doesn't happen and things get sorted out as far as like tariffs and things like that. But, that the number of manufacturers from that KPMG survey was 275 manufacturers. And it was 57% say they paused, reduced, or canceled capital expenditures due to economic uncertainty, trade, and tariffs. 42% scaled back and paused research and development spending. And more than half say that they're currently operating in endurance mode, which is really not, which is obviously not positive for the Canadian manufacturing economies.
One headline that was actually positive that came out last week is that Meta announced that they're actually building its first Canadian AI data center in Sturgeon County in Alberta. So that's just north of Edmonton. So it's one of the largest private sector investments in Canadian history. So they're investing $13 billion, which is about $9.2 billion US. And it's going to be an AI computing infrastructure for Meta's products. So Facebook, Instagram, WhatsApp, Threads, Meta AI. What I find interesting is that they chose to do that in Canada. Now, I think it's because obviously there's a lot of natural energy, reliable and, relatively inexpensive energy in Alberta, but great from a private sector and job creation. They're saying they're going to create 3,000 construction jobs at the peak and approximately 300 permanent jobs once it's operational. So from a private sector standpoint, funny to see, Canadian companies are talking about leaving Canada for the US, but one of the largest US companies, one of the largest companies in the world is, setting up an AI data center in Canada. I don't know if you heard that, but I found that very interesting last week.
Yeah, I'd be interested to kind of dig into it more. I did see that, I think it was yesterday or 2 days ago that it was announced. I think a lot of that might be from a distance or from an informational standpoint of, obviously data centers require an abundance of square footage and space and
Yes.
what's kind of readily available. One thing that Calgary's been doing very well is surpassing Ottawa for the largest high-tech sector within Canada. And Calgary's really been kind of diversifying away from just relying on oil because of their ebbs and flows, which we've seen in their real estate market, and their whole economy. So I think a lot of that plays into that. And I'm sure how Alberta is also kind of pushing against and how they're treating, as a province from a tax perspective, how they also are, looking at things and treating corporations. From an employment standpoint, we're obviously touching on the employment numbers. We also, from last week, we were talking last week about bonds coming down, things, looking positive. And then, of course, as happens every week, we also then have the conflict in Iran start up again. And the, oil jumping up again, blockade on shipping starting up again. And we, of course, saw bond rates come up again. Just in time for our Bank of Canada announcement tomorrow on the 15th when this episode comes out. What have you been kind of seeing in the oil markets and in the broader bond market?
Yeah, pretty wild because last week the crude oil price was at $68 at one point. So pretty wild, Dave, because a week ago, crude oil was sitting around $68. The market was recovering, again, based on the news that, an agreement was imminent when it came to Iran and the US. Now, as of yesterday, Trump is basically saying that they're going to be the guardians of the Strait of Hormuz and they're going to be, charging 20% for any ships that are going through. And they're talking about bombing Iran overnight. So, there's just oil now is at $80. Like the fluctuation in oil prices, I don't think has ever happened before, not to this scale where it's literally fluctuating $40 to $50 over a 1 month time frame, like just absurd. So I can't imagine the stress that the, bond market makers are under as far as trying to figure out what the heck that price is, because the bonds have actually stayed fairly consistent since May. Since basically April, March, they were down at 2.7, and then they popped up to 3.2, maybe. We're talking about the 5-year Government of Canada bond. And now it's kind of hung out between, 3.2 and 3% for the last 3 months, right? So it's kind of been consistently inconsistent, I guess, where it's like rolling like 0.25%. To say that 0.25% isn't a lot is kind of crazy, but it's been fluctuating basically 0.25% between 3 and 3.25. But we've seen fixed rates kind of mimic that, right? They were well below, well, not well below, but they were below 4% back in March. And now we're kind of seeing them hover in that low 4, like 4 to 4.5. That's kind of where they've been. And maybe it goes down 0.05, it comes back up 0.05, but there's been some stagnation with rates. And again, it's just because nobody knows what the hell's going on. Like everyone's kind of waiting. And like, even when there's positive news, you almost have to give it 2 weeks to settle because 3 days later, we're bombing them overnight. We're going here. We're doing this. We're taking over the strait. Like it's just a headline after headline after headline of good news, bad news, good news, bad news, good news, bad news. And I think everyone's just kind of numb to it now. Like nobody knows what, everyone's just kind of waiting. And I think maybe that's by design. I don't know, but it seems like nobody knows. The bonds right now are at 3.18. Fixed rates are kind of still sitting in that 4.29 range-ish. But variable rates are still sitting at, 3.6 as we've talked about. So, I mean, honestly, nothing has changed, but everything has changed. It's a very weird rate market right now.
Yeah. And even at that, of it being such a weird rate market, we saw only 2 or 3 lenders overnight with the spike in bonds on Monday, the 13th. We saw 2 or 3 lenders increase their rates by 10 basis points on the fixed side, but everyone else didn't really change. We saw one big bank compress their variable rate by 5 basis points, their discount to prime, but really only 3 lenders changed their rates. And usually when we see spikes, you kind of have that, like everyone changing over that same timing. And I thought, with that only being the 2, there was one that changed that discount to prime, that compressed that a bit. But, really only having 2 lenders change their fixed rates is kind of, odd. And I think that speaks to where they're looking at the bond market, they're looking at the swap market, and it's so inconsistent. And we've got the Bank of Canada decision on the 15th tomorrow, which everyone's expecting a hold. There's no way in which, even with the news of the employment market and things like that, that anyone's seeing that they're going to, increase or anything like that. So to your point, nobody, even the economists don't really know what the heck is going on. The banks don't really know what's going on. They're, having to take it day by day because a tweet and a Truth Social post really kind of throw the market for a loop on it and on its dime, right?
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TowRep at atozcleaningexpert.com to receive priority scheduling for your next listing.
We keep saying it every week, but it continues to be interesting what the hell is going on, because even if and when this gets sorted out over in Iran, it's not, it's not going to be the same as what it was before. It's going to be, everything with regards to oil traffic is going to be different. And then it's a matter of like, what new is there going to be that's going to affect the market? And really kind of that's in a lot of the surveys that you read and a lot of the commentary from home buyers is uncertainty. People don't like uncertainty, and rightfully so. And I think, when we talk about the housing market, when we talk about anything like that, is really more so in the uncertainty of the market. When you've got all these conflicts, when you've got rates going up and down, like, is it the right time to buy? Is it bottomed out? Like, where do things stand? Is there still a better deal? Everyone likes to obviously get the best deal possible. And so they're kind of sitting on the sidelines as well, looking at that.
Just generally speaking, Dave, like, it is the summer, we're mid-July. Everyone's kind of, people at the cottage, people are camping. It's kind of like kids are on summer break now. What are you seeing in the actual market? Like in your specific market or with your agents, like what's kind of the overall sentiment right now as far as motivation to buy? Because personally, I'm not seeing anyone slow down. Like, although there's all sorts of confusing headlines and stuff, like there's still homes moving. There's still people shopping. Like, it seems like people have either just said, you know what, I don't care about the headlines, I'm just going to go find a home, or people just have no idea what's happening, or they just don't care. Like it's I don't know. It's one of the two. Either they have no idea that all this is happening and there's fluctuation and they just need to buy a home, which is probably best, or they're aware of what's happening and they just say, you know what, I don't care. I'm just going to keep moving, because I don't know. It's very confusing. You'd think this would cause people to hesitate, but it seems as though this is a busier July and June than we've seen in years past. So what do you think? What's the catalyst? What's causing all this?
I mean, definitely in speaking with some of my agents yesterday, I definitely, like, they have very busy Julys for closings, and for some of them, like historic numbers of what they've seen. But again, just like any industry, then you've got others that have, wretched Julys from a numbers standpoint. Obviously, things balance
Yes.
out, but I think it's kind of split down the middle of people that are numb to it, like you said. They become numb to the situation, tired of it. Rates where they are, people have just accepted the fact, and this has been ongoing for a little while now, that they've become like, this is what the rates are. Like, it's not, everyone obviously wants the best rate possible, but it's a matter of like, the rates are in the high threes, low fours. This is where they're at. And I think that's, people are realizing that. They've been looking, maybe they've been looking in the market at properties for over a year. They've got pre-approved it last year, pre-approved again. The rates haven't really changed. I've had people come back to me from last year that started shopping. They came back again in the last couple of weeks to get pre-approved, and find out where rates are. And I look back at what was provided to them a year ago, and it's basically the exact same. And
Yeah.
so I think those same people again are like, yeah, okay, well, nothing really changed from last year, and this is where we're at. So for those buyers that are wanting to get into the market, that are first time home buyers, they're like, okay, well, there's no point in waiting around anymore because rates are what they are, and they're kind of stabilized, if you will. I will say, I was in Carleton Place, as you know, on Sunday, and I popped into an open house with a realtor buddy, and there was the last maybe 45 minutes of it, and there was reasonable traffic, and it was everything from first time home buyer to somebody rural looking to sell and sell their place and move into the big city of Carleton Place, things like that. But there was a number of groups by, and certainly none of the conversation was that they were like worried about the market or anything like that. But there's obviously going to be that subset.
Yeah, I think there's less people probably looking to invest, more people. Like, I think most of the buyers currently are just people needing to buy a home. Like, they're either upselling or upgrading, or they're first time buyers, but we're buying, rates are okay, we can afford the payment, let's do it. Like, it's not so much what's going to happen in 5 years, what's happening with the jobs. Like, it's really just, we need a home, we're going to buy one, this is the price range we're looking in, and let's do it. And I think homes are still, I don't want to say to discount, but I think they're fairly priced right now. Like, that home that you're talking about, single family, right at 700,000, like basically right at the average home price. Beautiful home, had a pool, had a hot tub, great yard, like great location, obviously great community. Like, that's a gem. Like, people see it and they're like, oh, this is exactly what we want. It hits all the notches, or all the check marks, whatever you say. No, what
Check
do you say?
boxes. Checks all the boxes.
Yeah,
Holy
checks
geez.
all the boxes. Checks
Have
all
more
the
coffee.
boxes. So it's one of those things where it's like, perfect price point. This is what we expected. Great community. Let's do it. And those are the homes that are going to get multiple offers potentially, because it does check all the boxes of multiple people. And there's not many homes like that. But more so just at the price itself. Like, I think 2-3 years ago, or like kind of mid pandemic, this would have been a 799, people fighting at the door in the driveway to get it. Now it's a fairly priced, accurate, beautiful home that people can afford, and I think that's what we're kind of seeing is people can take their time. They can find the home that they're looking for. There's not as much urgency. And the market, to me, is like almost perfectly balanced right now. Like, there's a lot of listings. There's a lot of people buying. Rates are on average still
Pretty stable.
still below average even. And, people are okay. They're like, okay, my job's stable. We want to buy a house. Let's do it. So it feels like it's a more calm market right now, not in a bad way, like an actual comforting, this is a balanced market. This is what a balanced market actually looks like. And we haven't had it for years. So people are feeling maybe like it's slower than it needs to be. But really, this is what a balanced market look like. This is what the market should be 12 months of the year, every day of our lives.
The inventory number speaks to exactly that. I think it was 3.2, 3.3 months of inventory. I mean, these stats I've always said, 3 months of inventory is basically your balanced market. And like you said, we're kind of feeling it in that sense. The unfortunate thing is those clients who have bought a property, house hasn't sold yet. And so we're having to have those conversations because people
Right.
can take their time. But really, that's also indicative of kind of where the market's at. People can take time and look at multiple different options.
I will say, it seems like, and this is a nod to agents like realtors. I think clients are much better prepared now when those situations come up, because I think their agent is actually properly explaining to them, look, this is where the market currently stands. This is what's happening. This is what we may need to do. Here's option one for your home, list price. If we don't sell in 10 days, this is option two, and et cetera, et cetera. And they have a plan from the get-go. You need to sell your house. You're buying this house. Let's keep it moving. I think previously people had this, like, I don't want to say illusion, but this idea in their head that their home's going to sell over asking, multiple offers, like kind of pandemic type sales prices, because that's what they heard in years past. We're not in that market anymore. And it seems like the sellers have kind of caught up to that. We've been talking about this for probably a year, that sellers have this kind of overinflated number of what their house is worth. I think their realtor partners now, their agents, are doing, I don't want to say a better job, because I don't want to say they were doing a bad job before, but it seems like clients are just more informed as to what the actual market looks like right now, and they have proper expectations when they're listing. That's what it seems like when I have these conversations with clients, and I kind of give them that sip of the fire hose. Look, this is the dynamic. They're like, oh yes, we've had this conversation with our agents. Like, great. Like, that's excellent. I'm glad, because it's very important to understand what you're getting yourself into when you're buying and selling,
I mean, we're a little bit removed from those peak sale prices as well. When we were closer to that, people would have the mentality of like, oh, well, my neighbor got this, but that was, when the market was hotter or things were moving. And so, we're far removed from that. So to your point, I think that, again, that stability in pricing, that stability in market, and for kind of a longer period of time has helped to kind of just remove that notion from people mentally that, they could have gotten this, because they're years out from what that market was.
yes,
Which I think is helpful. There's one thing I wanted to kind of touch on today before we kind of get into the mood boost is a bylaw, that is for those that are landlords or that are investors that are listening. You might not have heard about this, but there's the city of Ottawa, one of our councillors put forward a new bylaw for anti-renoviction bylaw. So I just want to touch on that, because I know we do have a number of investor listeners that own maybe one or two rentals or more than that. But it's a new bylaw that's being proposed. It has not fully passed committee yet, but it effectively, in short, is looking for tightening up the rules around renovation. So, if somebody's looking at renovating a home or a rental unit, they can provide notice. I believe it's 120 days, and they then, renovate the unit. You legally have to offer that unit back to the tenant at the same price.
cool, interesting.
But typically what happens is, unit gets renovated or under construction, or they're doing something to the property. That tenant has now moved out. The likelihood of them moving back in, if it's, takes 6 months to do the renovations or what have you, moving out for 6 months, they've already signed a lease, a lot of times it's unlikely that they're moving back. And if they're not moving back, then it goes to open market as far as what that landlord is able to rent it out for. And in predominant portion of cases, it's, that they're doing significant renovations to the property. What it is, so this bylaw is looking to have the landlord, before they can provide a notice to tenant, that they need to get essentially a license from the city, in the sense that within a week of providing the notice to move out to the tenant, they have to secure this bylaw license. And really, in order to get that, is that they have to prove to the city that they have a building permit. So any significant renovations that isn't just paint or changing out an appliance, you would need a permit for, for the most part, or at least proof of, there's things that you don't need a permit for, like if you're updating a kitchen or anything like that, you're not needing, like, cosmetically, like things like that, which is renovations. But if you're doing significant work to the property itself, like adding a unit, renovations, demolishing, anything like that, there's obviously permits needed. And so they're looking for the landlord to provide and prove that they are, with permits, that they're, that they're actually doing work. So there's critics obviously on both sides of the fence. Those advocating for tenants, saying that there's not enough teeth to it. And then on the other side, for landlords, saying that there's, it just becomes more laborious a process. The city already takes a long time for permits, and added costs, like what, they try charging for this licensing cost, this and that. But part of it, what I think is good, is, really depends on how it shakes out at the end. But, part of it is the landlord needs to provide the tenant, as part of this bylaw, an education package of what their rights are as a tenant when they're providing that notice, as opposed to the tenant having to find it out on their own. And really kind of part of that is what their rights are, being able to come back to that unit. But really the goal of it is to ensure renovations are legitimate and that tenants aren't unfairly being pushed out of what they call affordable housing. But, you know, it hasn't passed yet. We'll see. It's kind of a debate. It kind of highlights a debate, you know, of broader challenges like that the markets are facing, whether it be Ottawa or other, how to balance like tenant protections and really kind of maintaining and improving housing, like the housing supply or the actual units themselves, right? Like if somebody is in a unit that they've been paying $500 for the last 30 years, that the likelihood is that unit is going to be, or that property is going to be in disrepair and it's going to be run down. And so there's kind of that to it, but we're waiting for it to be passed through council. I'd be surprised if it doesn't, but it'll just be a matter of, you know, what that final looks like.
Yeah, it's a great update, David.
Well,
Great
sir,
update.
should we slide into some mood boosts?
Absolutely. Guess how many I
Boost
have
me.
today?
4.
3. Nope, 3. All right. It's pretty much 3 99% of the time. Okay, number 1. Why did the orchestra get struck by lightning? It had a conductor. Had a conductor. Yeah. Number 2, I told a bad chemistry joke once. I got no reaction.
Okay.
Yep. Last but not least, what did Spartacus say when the lion ate his wife? Nothing. He was gladiator. Wow. He was gladiator.
Pretty good. Pretty good.
There you go. Wow. Thank you, everyone. Thank you to our amazing sponsors. Thank you to you for listening. We're back every Wednesday, 10 a.m. Be sure to check us out on all of our socials. Thank you for listening. Be sure to comment, like, and subscribe this video, and we'll see you next week.
Come on, England. Come on.